Hello, everyone. My name is Natali, here with Troutwood. We are filming a special episode on the events surrounding GameStop and Robinhood. A brief introduction into why we are doing this, and then I'm going to introduce a roundtable team that is joining me to have this discussion. We have an audience of educators participating live. We will be taking questions live from YouTube chat. When the GameStop news first broke, I'm going to date the filming of this podcast. It is January 29th, 4 o'clock Eastern time. The GameStop discussion has been occurring all week. The purpose of this episode is to help prepare educators for the questions that their students are likely to be asking next week and probably already have been asking this week. Our impetus was seeing the questions that our own team had. And then I teach at the University of Pittsburgh. Jeff Dabadek, our chief strategist, teaches personal finance at Grove City. And the questions our college students were asking supported the need for this conversation. So we're going to have some fun. I'm going to introduce the team that's joining me. We thought a roundtable format would be fun, would be helpful. Extremely proud. Gentleman Brian Portnoy, CEO, founder of Shaping Wealth, talented author and good friend. Brian, welcome.
Hey, Gene.
A colleague of mine here at Troutwood, Rachel Brumbaugh. Rachel is a product specialist and is just terrific at making sure we answer questions effectively. And Janie Snavely. Janie is educator at Southside Area School District and has the unique role of wearing both a computer science hat as well as the personal finance hat. And the events taking place with Robinhood are not mutually exclusive. It is the combining of technology and finance, which makes Janie extremely well positioned to help broker this conversation. Welcome, everyone. Thank you. Janie, Rachel, thank you.
Glad to be here.
You're welcome.
We are going to start the episode with each of us addressing one of the topics that has been very front and center in the news. We're going to attempt to do so concisely, and I'm going to encourage both our live audience, but it also follow up afterwards. If you're following this recording at a later date, don't be shy getting in touch with any one of us in terms of helping you answer the questions you have. So Brian's background. Brian, before we start, I asked you, how many meetings have you done with hedge funds?
About 3,000.
3,000 meetings with hedge funds. That ought to qualify you to have an opinion. And let me, before I push this to Brian on the hedge fund question, I do want to just disclose nothing we're talking about here is going to be construed as investment advice. Brian and I both worked in a past life in institutional investing arena. Neither of us manage money. So we don't have an inherent conflict of interest. We can speak pretty openly. Brian, what is a hedge fund?
A hedge fund is an investment, a pool of investment capital. So it's a pile of money that's managed by an individual or a team of people with a great deal of flexibility, meaning that hedge funds, and there are thousands of hedge funds. Most of them are quite small, but there are some big ones. They manage capital on behalf of others, and they buy stocks, bonds, real estate, more complicated securities and derivatives. They can own them outright, meaning that they're long those securities. They can short those securities, and I think we're going to talk today about what it means to short something. They can use leverage, meaning that they can use borrowed capital to amplify the size of the bets in their portfolio, and have a number of tools in their toolkit. And maybe I would contrast that to a traditional mutual fund that is, just long some stocks or bonds. They're not going to be really using derivatives or leverage. It's a much simpler structure. Hedge funds are very flexible. And the last thing I'd say is that a large percentage, I'd estimate that more than 60% of the assets that are in the roughly $4 trillion hedge fund industry come from institutional investors, meaning pension funds, foundations, endowments. So there's sort of a Hollywood vision of hedge funds as these marauding, nefarious things that sort of go over the market and try to take advantage. Most hedge funds, most of the time, are investing the money of regular people.
Audience, anyone listening live, that expertise. Brian, if we said any words maybe lost him, I'm going to ask that, that there's good pushback from our live audience in terms of helping clarify words. Rachel, so Rachel, one of our team members at Troutwood. Rachel, in your opinion, what is Robinhood and what does Robinhood do?
Sure. So from I guess, regular person in terms of not having a financial background, I see Robinhood as a simple, easy way to buy stocks. It should be, from what I understand, free stock options, things like cryptocurrencies and ETFs. I don't think there's an account minimum, which is a great thing for smaller investors too. And I do want to push back on Brian a little bit about institutional investors versus like regular people investors too, because that's one thing that's been coming up a lot in the news recently. Investors in terms of retail investors or institutional investors. So I see it more as for people with like retail investing, which we can get into later. But yeah, just a simple, easy way for people to trade stocks. And you don't have to have a lot of background information to do so.
In preparation for this discussion, I did a roundtable with my students, most of whom are seniors at the University of Pittsburgh, and I asked how they buy stocks, and one of the students said, I hit a button at Robinhood and it shows up on the screen.
Exactly,
So it's that easy now, and we'll talk, certainly the pros and cons. The term I want to just define is short selling, which has also been very popular in the news. And a short seller simply is betting that a stock is going to go down, not up. And you'll see this often. And you may see it in two forms. One is the just very standard. I think a stock like GameStop is going to lose value. The other could be a hedge. Maybe you have a very large position in a company called Apple or Tesla, names you're familiar with, and you maybe do a small position to offset a long-term position, larger company. Janie, help tie those loops together for us now. As you look to your students and think of the questions they're going to be having next week, we just threw three big words. But when I see the chat in our team at Troutwood and when I see my students at Pitt, they're words they're all throwing around right now.
Yes. So basically, I think we do have to understand that Robinhood is the free thing that you don't need to have a background in it, right? You can just try it, and you don't have to have any knowledge or any expertise in it. So you're the actual person, or I want to say the product, right? Someone had said that earlier, that you're the one who is. You have no expertise. We'll just say it that way. And with that, you have the hedge funds, you have the short sell, you have all of those things working together. And I think students and people just in general are going to need to understand how it all fits together. And that's what you're going to share with us.
Janie, I'll share an analogy, and I want to welcome Sharon Gaitens. Sharon's a teacher at Moon Area School District who's also going to help us moderate and keep us all accountable. Sharon, welcome.
Hey, thank you, Gene. I'm happy to be here.
So as I was having this roundtable discussion with my students at Pitt, an analogy that I think all of the educators will find helpful, I was asking them questions. I wanted to learn their perspective. The headline as we are sitting here right now on CNN, inside the Reddit army that's crushing Wall Street. The culture of Wall Street bets not only encourages risky trade, but also the trading of your entire net worth. These are the headlines my students are seeing live the same time as we're talking. And they had an interesting perspective. One student said, well, hey, this is great. We should be able to do whatever we want. It's a free market. And another student said, yeah, if I buy a hammer, no one tells me how to use it. And then another student said, but we don't let you drive a car without a license. And so that's a great analogy. But then another student said, yes, but the reason you have to get a license to drive a car is because you can hurt someone else when you're driving a car. When you're direct quote, when you are trading in Robinhood, you can only hurt yourself. So it was very interesting to watch the discussion between a class here as they took the different sides of the argument. This is very interesting. Brian, before we dive into it, we had a bunch of questions submitted from students and educators prior that we're going to work through in addition to taking the live questions.
Sure.
Brian, I'm curious what your high level opinion of what's happening is in 60 seconds, like that high level. Here's the snapshot of what I saw this week.
Well, I'll give it to you in maybe one line, which is that what we're watching is a fight inside a casino. So Robinhood is an arena. It's a brokerage platform where you can buy and sell stocks, options, ETFs, things that Rachel mentioned. You can do so frictionlessly because there's no cost to it. And maybe we'll get to, when something is free, I think we know from social media, you are the product. We'll get into why at Robinhood, you, the trader, are the product. But basically, you have a group of people who wanted to take a particular stock, GameStop, and run up the price. And so they're going into Robinhood and they're buying it. And at the same time, there are other investors, a few different hedge funds that are short the stock because on a fundamental basis, GameStop's a pretty crappy company. It doesn't have good profits. It's highly levered. It doesn't have a lot of growth in it. So some people think that the stock's not going to do well. And you see this tug and pull between the buyers and the sellers. But keep in mind, this isn't real investing. This is speculation. And this is a fight inside a casino.
I like that analogy. The one I use with Robinhood is that it's like opening the door to a candy store and giving a 12-year-old free access. The best day of your life on day one, we don't give that same 12-year-old a toothbrush. So best day ever quickly becomes a little bit painful. And that's what just because the debate isn't whether an individual should be allowed to trade. Absolutely, an individual should be allowed to trade on Robinhood. I think the conversation, the framing for educators and students is understanding the context, understanding the arena within which they are operating. While you might get confetti in an easy, buy now button, it's real money. What are the consequences and what are the tools that are required to prepare individuals for that arena? Sharon, we kind of all had done an introduction. I don't know if you want to hit us right out of the gate with a question. We have a bunch of prepared questions, but I know your passion and interest in this subject.
Oh, absolutely. Well, I just think it's very important for the students to hear what you at Troutwood and then, of course, this team has to say, not only historically about the stock market, but the current events that are happening now. And it's such a timely conversation. It's great, that you're introducing the terminology that you're doing today. So for those of you who don't know, I am a gifted education teacher, K through 5 in the Moon Area School District, and the financial literacy opportunities that Troutwood has provided to not only my students, but those around the area have been fantastic. And I'm excited to hear what the team's going to be offering today to all the students who will be benefiting from the knowledge gained from this session.
So I'm going to try to feed off of Brian with in my opinion, a summary of the individual trade that occurred here. And then Janie, Rachel, let's just start the questions. Let's get into the dialogue. We have our first live question on YouTube, but let's just start the dialogue and make sure that we are equipping teachers. That's the goal today. So that everyone listening understands, and this is not a real time. This is just a snapshot of very recent history, though. GameStop is a company that was losing $4.18 a share. To Brian Portnoy, GameStop was a company going probably the wrong direction. This is not we don't have a strong opinion one way or the other in GameStop. That's just the direction it had been heading prior to this message board activity. Whether an individual buys GameStop at $4, $14, or $400, it is still a company losing $4.18 a share. This was a very interesting discussion I had with my college students when I said, well, what happens when I buy a share, Gene? Well, if Janie wants to buy a share of GameStop and her potential market is Gene, Brian, Rachel, and Sharon, well, the four of us, if we want that share, have to compete for it. And the more badly we want the share, the more we'll compete, the higher that will push that price up. That is happening. But whether Brian buys a share off of Janie at 14, 100, maybe Sharon buys it at 200, I buy it at 300, we're still buying one share of a company losing $4.18 a share. And it's important to point out that that transaction is between us, the individuals in this case. GameStop is not benefiting from that transaction. And the question I would pose to the educators and to the students, part of today, we want to challenge you with take-home assignments. Have your students understand what it means to short sell, because there are consequences. Margin, M-A-R-G-I-N, important word to understand the definition of. Giant consequences if you don't know what you're doing. How does a publicly traded stock work? My students at Pitt, we started saying, Gene, can you believe what's happening? This is Wall Street versus Main Street. This is Reddit. This is GameStop. And then the last question, an hour into the conversation, was, Gene, what even is a publicly traded company? That's the opportunity that educators right now have, particularly the younger we go down in age before some of these, choices have been made, because it is real money. So I think that's important to say. That analogy of Janie trying to sell it to all of us, the money is taking place between the 5 faces you see on the screen. And the question to the group, what happens now if Janie tries to sell? Or what happens if we want to sell and no one is interested in buying? And Brian and I have seen what happens in past life. I don't want to make a prediction, but it's hard to imagine GameStop staying at this elevated share price.
Well, I would certainly agree with that, although I'm never in the business of predicting what happens to markets overall, let alone individual stocks. But this, I think we do need to point out that this is an extraordinary situation. This is not normal. Like, a little bit of financial history is being made with what's taking place right now. So one thing we also want to do is be careful that we don't over extrapolate or over learn from this particular experience. There's a lot of funkiness in how Robinhood is set up. As a brokerage, the pipes going in and out of that business to the broader market. And so there are some really important lessons to be learned here, but at the same time, to have a tiny, unprofitable, over-levered, poorly run business see its stock price go up by several 100% in a few days, not normal. And so let's learn some lessons from that, but let's make sure that we're not learning lessons that we shouldn't.
100%. And what's the price of a lesson? I had students say, Gene, Wall Street's taken down Main Street, with a smile on their face. And I want to take time to understand that expression. I want to understand that emotion and what's happening. The other side of this trade, and we do have a team behind the scenes, so if any of the 5 of us can't answer a question, we can get you the data. While the 3 big hedge funds were the target of the Reddit message board, when you look at the largest investors in GameStop, you see names like BlackRock, Vanguard, Charles Schwab. These are mutual fund and ETF providers that individuals own. So there is a much larger network that's interesting to go. There's a question that's very difficult to ask. How long do you believe this short squeeze will last? Brian, you probably are more qualified than me for at least an opinion on that question, and don't ever be afraid to say, I don't know. I don't know the answer to that question.
Well, I know how we can go about answering that question, but I don't know what the answer is. And actually, just as an aside, but something really important, been doing this for a living for a quarter century. The 3 most important words in all of investing are, I don't know. And if you don't know something, it means that you should have less confidence, which means you should be less likely to take action. We're just wired for overconfidence, and we need to check ourselves sometimes. There's no predicting when a particular short squeeze can run its course. What is a short squeeze, by the way? When you're short a stock, and the stock, it means that you've borrowed the stock from a brokerage or from a bank, and at a certain point, if the stock goes down in value, you can buy it you can sell it back or give it back to the bank at a lower level, and you pocket the difference. The opposite dynamic is that if the stock goes up at a certain point, that bank or brokerage who loaned you those shares, they're going to want them back, and you're going to have to buy back your shares. So you're originally betting that the company was going to do lousy. So GameStop, not a particularly good company by the numbers. But because the stock keeps going higher and the lenders of the stock want their stock back, even those who are betting bearishly against the stock have to go into the market and buy it. That's the short squeeze. So you already have some people long, and now the people who hate the company have to buy it back because for technical reasons, the lenders of the stock say, we want our shares back. There's only so many shares out there that you can buy back. So there's a mathematical solution to when the short squeeze will run its course. We just don't know. Gene and I wouldn't know the numbers behind the scenes to get to that level.
Janie Snavely and Sharon, that's what happened. How can we take what Brian just said and help equip you with that for the classroom? That is precisely what happened. A message board saw a large short position. There were sophisticated voices on that message board that understood that meant an investment opportunity if we could reverse it. Where do we need to take that conversation and bring it into the classroom for you? And that is not a common occurrence, by the way. That is not an investment opportunity that students will be able to look for and find.
I think anytime you're dealing with money, you teach the students right out of the gate. If it sounds too good to be true, it probably is. And so I'm thinking, introducing the students to possible ways of buying stock, but then knowing when buyer beware, seller beware kind of thing, let's let the kids know this situation with GameStop, while they know the term, think they know the company because they buy the products, they use the products, they don't really know the company. So this is what they have to learn, the financial part behind the scenes. And that's where I think, the panel's expertise could help tell students about that. Yes, the product, but this is kind of how it's managed behind, and this is what's going on, because they don't know anything other than, hey, I can get my games there, and can I use my gift card there?
Mm-hmm.
Well, and from my perspective, I would think that when you're teaching this in a classroom, one of the things I think is fundamental and technical analysis, being able to, to understand what that is, because I don't know if what's happening with Robinhood and in the market right now, how much research was done in the fundamental analysis or the technical analysis. And I think that should play a part. What do you think about that?
One thing I'd put in, so Janie, it's a really important foundational question, which is that if you want to buy individual stocks or bonds, like individual securities, so to speak, you have to be prepared. But even if you do your homework for days and weeks and months, there's still a pretty good chance that you're going to be wrong. So in my experience of evaluating hedge fund and mutual fund managers over many, many years, even the best of the best who would do months of research and know every last detail of a stock, their hit rate was maybe slightly higher than 50%. So there is a lot that goes into effectively investing in the market, because you not only need to know the bottom-up information about what you're buying, you need to know about the relationship between the different pieces to your portfolio, and you need to have some sense of the risk that you're trying to manage. One thing I want to make sure that we do is help students pull back to more of a 10,000-foot view here, and make sure that as we talk about investing, we're very much focused on goals. Because right now we're talking about trading, speculating, gambling. And for the same reason you can walk into, into a casino in Vegas, or I guess casinos are everywhere now, but you can walk in and you can play craps and blackjack, and you're going to have some fun. You might make some money, you might lose some money. No one would call that investing. If you're going into Robinhood and screaming YOLO, and you're just trying to buy a ton of shares of this company because there's a bunch of other people on Reddit who say that they're buying shares, what does that have to do with affording a new car, paying for your college, buying a new home, supporting your parents or your kids, or contributing to your community? That is investing, and investing by definition is goals-based. I'm not saying people shouldn't use Robinhood and that they shouldn't gamble, but they should understand that there's a fork in the road and a very, very bright line between gambling and investing.
So that's a good place, I think, to start from an education standpoint, is making sure the student understands how to come up with those financial goals.
Mm-hmm.
You know, being able to identify what those goals are and understand that they're going to change as they grow.
100%.
Yeah, to piggyback off of that, that's true. Like my students, of course, are younger, you know, versus the college students that you have versus, you know, a parent who's listening that's interested in investing. You know, their strategies are going to be a bit different, maybe with the same end goal in mind, but how they get there is going to be different.
Mm-hmm. A misconception that I think is important for educators to address with students. I have two here: the investing versus gambling comment. Publicly traded securities that the hedge funds that Brian alluded to, mutual funds, are investing in. The institutions, i.e., the professionals, they're not in the C-suite either. They're not in the boardroom with the company. But they don't have access to more information that we as individuals, i.e. your students, have. They maybe have more complicated algorithms, big teams looking for data analysis, but they aren't behind the scenes. Only the company employees are. So when you see on a message board, big news coming, that actually can't be communicated by an employee. So these message boards it's very important that individuals and students know the market dynamic and know that the folks at the company, well, their head down is working. They're not on that message board. But it is a dynamic. It's part of the arena. Brian, there's a question I want to throw to you on the message board here. And Rachel, don't be shy throwing in the other prepared questions we have at any point. Brian, why do investors borrow stock in the first place?
Well, borrowing stock is one step along the process of shorting a stock. So the best way to understand shorting is that you take the basic principle that is intuitive, which is buy low, sell high. Okay, we all kind of get that. You know, you buy at 5, you sell at 10, you've doubled your money. Easy peasy, right? Shorting a stock is the opposite. It's buying high, it's selling high, and buying low. Okay, just to be clear, you're selling high first and buying low. And so the natural question is, well, how can you sell something you don't own? Well, you have to borrow it, and you borrow it from a bank or a brokerage, whether it be a Goldman Sachs or a Schwab or a JP Morgan or a Robinhood or any platform that facilitates that sort of transaction. So the stock is at 10 and you're like, yeah, this company's lousy. Like no one goes there anymore. I walk by their stores, they're empty, but like the stock's really high. Well, you might say, I'm going to bet that this thing's going to lose, you know, a lot of its value once people really pick up on that fact. So you go to your broker, you go to Schwab or TD Ameritrade or E-Trade or Robinhood, and you say, I want to borrow shares at $10, and they say fine. And then what you hope is that it cuts in half, for example. And at 5, when you sell 10 shares at $10, you have $100 in your account. If it falls to 5 and you want to basically buy back those shares, remember you're selling high and you're buying low. So when it goes down to 50, you're going to buy low, $50, but you had 100 in your account. So you just doubled your money. You did it in the opposite, though, that a long investor would. And the fact that that is convoluted and confusing, I would admit in a heartbeat. And it's why shorting is one of the most dangerous things people can do, because you got to go through this whole process. And as someone who has witnessed sort of the short side of the market for 20 years, the smartest of the smart can get absolutely burnt and blown up in a heartbeat.
I'll add to that. If you don't understand it, don't do it. It's a really good investment philosophy. One of my, to Sharon, Janie, educators listening, I am asked every semester by college students about penny stocks. And I say this because there's a question in the YouTube chat right now asking, could this happen again? It's not going to happen to Apple or Tesla or IBM or Walmart or Target. The companies are far too large. Where it can happen is in the less regulated securities, the pink sheets, over-the-counter penny stock. I bring this up because personal, very strong opinion, individuals should not be playing or participating in penny stock. But I do get asked the question every semester. When I ask my students why, they say, well, Gene, if I buy a stock for 15 cents, I can make a lot more money. And I say, if you buy a stock at 15 cents and it goes to 30 cents, you make the same amount of money if you buy Apple at $500 and it goes to $1,000. So that's I think there is some education. What happened this week, and it's important to say the conversation's not over. We're in the middle of it. Mm-hmm. GameStop closed today at over $300 a share. I had a friend from the industry share a story. He said, imagine you can buy Twinkies or Ho-Ho. And you see the Ho-Hos for $3 a box on the shelf. And last week, the Twinkies were $3 a box. But now this week, the Twinkies are $400 a box. And you don't understand why everyone's paying $400 for a box of Twinkies. But you can still buy the Ho-Hos for $3 a box. Eventually, the Twinkies are going to have to come back down in price. We're still early stage. This is an incredible education opportunity for the classroom. Rachel, we had so many questions submitted beforehand. Do you want to throw the first one out?
Yeah, I think a great place to start would be, why is this such a big deal? I mean, it's stealing every headline, and we're talking about average people, average mostly meaning honestly the majority of people, which is scary. And I think for people who are using Robinhood, they thought this was an app for them, who didn't have a lot of education in the beginning. So is this going to instill fear in people? Is this going to give people a false sense of confidence? Why is this stealing every headline? Is it because it's unprecedented?
Can I ask our Janie and Sharon, can I throw you under the bus for that? I'm just curious on your opinion before we done. Why is this grabbing every headline?
Name recognition of the company. I think if it were, at least from an elementary school point of view, if it was another company that wasn't maybe a household name or a common company that the kids or families would be familiar with, I don't think there'd be as much attention paid to it by such a wide range of ages. But I think because it's GameStop and that's a company people know and are familiar with and have more than likely purchased something with, I think that's why. And it maybe hits home a little bit more the severity of the repercussions of what can happen at the end of this. That's my opinion.
Have you also had time to maybe unpack the little guy versus the big guy sort of mentality going into this? I know it seems like there's some sort of battle going on. Does it seem like somebody is picking a side? Or you're saying that like they're recognizing GameStop as something that they can connect with? Do you see them, backing what's happened, or just kind of taking an observer role?
Okay, so interestingly enough, I think from a teenager and kid perspective, it's interesting for this generation of kids. Now, this is, of course, solely my opinion, to see like the power of groups or influence and how much power they can have. So what's fascinating, for example, for my high school son, one of my sons, is that you can get so many people on board in such a short amount of time to turn something around that, is highly unlikely. It just seems uncanny and interesting to them. That's, I think, what's enticing about this news headline to the younger students. Like, wow, somebody put this out there and had a bunch of people buy into it and tried to change or influence this market. That's what I just kind of see, through the eyes of the youth.
And I can agree with that as well. I also do think Robinhood being students today are seeing with the internet just in general, or just social media in general, they're seeing other people, hey, what's this Robinhood? So I think too, they're getting introduced to something without understanding the foundation of what they're doing. So that bringing it back to investing and understanding what investing is, understanding those financial goals that was mentioned by Brian earlier. I think Robinhood is this like, oh, great, we can try it and we can make money. But then at the same time, they really have no idea. So it's really coming back to that foundation of explaining those financial goals and understanding what truly is Robinhood and what is happening behind the scenes as well. I think that's important as well.
And as educators, it is, I think, important that we recognize, to Rachel's point, and we see it in the YouTube chat right now too, the little guy versus, the big guy. Wall Street is not thought of highly by the average individual. I hope this is an opportunity for Wall Street to observe and maybe see, hey, we got to listen. If this is how people feel, what can we do differently? I am very interested to see what happens. I know, Rachel, we have some other questions. I do think that is the reason it's getting there. People can relate. It's will it happen again? I don't know. A teacher assignment. This is a pretty good classroom take-home assignment. Understand the metrics. A common question earlier in the year or late last year was why Tesla wasn't yet in the S&P 500. Tesla wasn't in the S&P 500 because it hadn't met all of the requirements to be included. That sounds crazy. It was a big, successful company. As you study companies and as individuals prepare themselves for Robinhood, there is going to be a new education that we have to gain. And that's I think it's a relatable company. It's a way to understand that it was an unprofitable company that had huge success, but it still hadn't met metrics. Rachel, what's our next question?
Yeah, I think we should start actually by defining free market, because a few of our questions have that term in them. And I think it's been thrown around a lot, a couple of times during at least this live stream, but also, like Janie said, just the internet's blowing up with people throwing terms they might not know. So in terms of the free market, what is a free market, and why is everyone concerned that it is being manipulated?
Brian, I'll throw that one to you the first stab with that smile.
Well, that was a smile of fear, not enjoyment. That's a very big question. What is a free market? Should we start with Adam Smith? I could plant there and just move forward. No.
Hey, Brian, can I interrupt you for a second too? Yeah. With the free market, if you're in economics, free, what they describe as free markets, is that the same? And that might be what the kids are thinking. If they've had any history class or economics class, they'll think they know what free market is. Does that really apply in the investing world as well?
I mean, it does and it doesn't. And freedom is a dial, not a light switch, meaning that when we casually refer to free markets, it means that you can walk into Walmart or Target and purchase whatever you want, or you can go to Robinhood or Schwab or E-Trade and click a button and say, hey, I want to buy 10 shares of GameStop or whatever the stock is. And that feels unfettered, that feels relatively free, and that's fine. But that doesn't mean that it's not a regulated space. Okay, so you can walk into Walmart and cause a ruckus and be removed from the store. You can go into a brokerage. It's not a physical space, but it's a digital space. And there are terms of service. All that language in 5-point font that goes on for pages that no one ever reads under any circumstance. There's a lot of stuff in there that basically says that we, the private company, can more or less do whatever it is that we want to do. So there are, there's a certain broad sense of freedom, but there's also kind of rules of engagement that are there for you to understand. And, Gene made an important point, which is that we're in the middle of this. We don't know how it's going to play out. So it's an open question as to whether Robinhood did anything unethical, let alone illegal. It might be that they're just executing on their terms of service in the same way that, we all believe in free speech, but you can't go into a crowded movie house and scream fire. because that creates danger. That creates big problems for others. I'm not in any way saying that's the analogy for GameStop. I'm just saying that every private company has its rules, and we have to abide by them, or we can choose just not to shop there, to consume there. So there's a lot of kind of dramatic gesturing about, well, free markets are being ruined. All else equal, I disagree. These are, first of all, we're not in a market. We're buying services from a private company. But generally, most competition is regulated in some way, shape, or form.
For educators, an assignment that we've had some of our team members at Troutwood doing that I do recommend for your students, let them form their own opinions. Read the disclosures on Robinhood. You'll learn a lot when you read that small font. And again, it's not a yay or nay. It's an understanding the arena that you're operating in. I think we will learn more on the kind of question there, Rachel, on the free markets, Robinhood halting shares, other brokerage organizations halting trading yesterday. That will open a lot of conversations. That was, I think, hindsight will look back and say, it was the wrong move. But I'll be curious to see if it was more, if there was a behind the scenes, maybe just thinking out loud here, were there algorithms showing that this could potentially spiral? These are great assignments for your students to capture this. The whole world is reading this. And so stepping back, why does it matter? Brian has excellently said, we're talking investing, not trading. Trading is no different than a casino. Doesn't mean you can't go have fun on a weekend. You should be investing beside it for stability and a foundation. But what an incredible educational opportunity we have with these headlines. We have a question in the float right about the volume in YouTube right now. What level of volume of retail investors does it take to significantly move a share price like GameStop? It's an excellent question.
Yeah.
So the volume, when you think about this is like one share, is one share would be one share volume. Over the past 3 months, the average volume in GameStop was 26 million shares traded a day. Over the last 10 days, 108 million. There are only 46 million shares in the company float, i.e. that's tradable at the moment. So that's another kind of, what's your lesson here? And there's been some chatter about this in the message board here as well. The folks who started this message board chatter, well, they're probably not all still invested in the stock. I say probably, I do not know, but with 108 million float, with 108 million shares a day over the last 10 days and 46 million tradable shares, there's a lot of shares trading hands. People are getting out of this position as quickly as others are getting in. Another great opportunity for your students to dive in and understand what that means. Rachel, what's our next question there?
Sure. The next question would be, how can you see the SEC and other governing bodies mitigating this problem in the future? So Brian, you kind of touched upon that we're not quite sure yet, but a best guess.
Yeah, thanks. Number one, we're still in the middle. We're in the arena, the game is still going. So we don't know how this is going to shake out. There are a lot of very important questions as it pertains to whether or not Robinhood was playing by the rules as dictated by the SEC, the Securities and Exchange Commission, and other regulatory bodies. When it gets into, it's funny, we're talking about the free market. The buying and selling of stocks and bonds is one of the most heavily regulated areas of human activity on the planet. There are multiple regulatory agencies that govern, sort of trading platforms like Robinhood. There are rules on top of rules on top of rules. We will know in due course whether or not, for example, the most important current example, when Robinhood shut down trading in GameStop yesterday, and technically they didn't shut it down, that you could sell, but you couldn't buy more. Was that because of there were regulatory rules that they had to abide by, that if they continued to allow that that trading, that they would have been in violation of the law. So from a PR point of view, it looks terrible. It looks like they're kind of sticking it to the little guy. But at the same time, they might have just been abiding by the law, and the laws are what they are at any moment in time. So we're going to learn a lot, and the chance that there are congressional hearings about what took place, I would peg at about 100%. I'm not one to bet on.
I would echo that, Brian. I think that is likely to occur.
Yeah, and so, one of the things about capital markets over the last 300-400 years is that they are a story of transformation and adaptation in response to things that we couldn't have foreseen. This is a really weird event. The fact that our, young students, the mailman, everybody's talking about this, it's kind of bizarre. I mean, let's not take that for granted.
Brian, that's an insightful comment. There's an old paradigm, and it's been in the YouTube chatter when the mailman's talking about it as he's dropping the mail off. That's usually a sign.
Yeah. I've got 3 teenage kids, and when all 3 of them are asking me, they don't really speak to me much. So when all 3 not only speak to me but ask about GameStop, I know something weird is going on.
Thumbs up, Stephen. There's the comment. So I want to share, and because this is educators, SEC. Rachel asked, and Brian, that's a word your students should know. I'm going to quote one of my college students from earlier today. I said, how do you buy a stock? They said, I don't know. I see a stock. It shows up in my account. I click buy. I don't really know what happens after. Again, real money. And again, okay, if that's your casino on the weekend, that comes with the responsibility. But there is something important. Even though this college student doesn't know what happens, the SEC does. When he buys the stock, it is deposited. He owns the account. And that gives us confidence as individuals. It gives the market confidence. So SEC is important to understand and how they regulate this market.
A follow-up to that would be, how does this affect the new generation of investors? We keep talking about the people that are in the thick of it right now, but what does this mean for somebody who's going to come, after the dust settles? What's going to change for them?
Yeah, Brian, I'll take the first stab at this one. I'm looking out into the cloudy crystal ball.
Yeah,
it's hard to imagine GameStop not returning to the prices of a couple weeks ago. Very difficult to imagine a scenario where it stays this elevated. So someone is going to lose, and with the company sitting at a $23 billion valuation, that's a lot of money that is going to be lost in theory. So it is a painful lesson. Although I had students today say, Gene, I think a lot of the folks that bought GameStop don't care if they lose the money. I think that's a big enough dollar amount. Many do, no matter how you divide that. This is opening the door to a conversation that isn't being had enough places. We've got a ton of great educators listening in. Teaching investing is now a critical life skill. It's no longer a hobby. It is no longer maybe I can take an elective and get it. We as individuals are responsible for our financial future in ways we never have been before. So yes, Robinhood and their peers have opened these doors. Now it is up to the educators, to the students, to us as a community to prepare them for this new normal. Janie, was that unfair of me to put that back on the educators and say, hey, here's the arena, now go do it?
No, it's a valid point, because as educators, the students are going to be asking these questions. Again, we can't, with social media the way it is and the way students have access to news right away at their fingertips, they need to know this. So investing is going to be, the big scary thing is how big of an impact will it have on the curriculum of the personal finance with everything else. I'm sure you could teach a whole unit, just a whole 9 weeks or 18 weeks just on investing. But it's necessary.
Gene, can I jump in for a second?
Absolutely.
Yeah, I just want to put a plug in for behavioral finance, since it's my bread and butter. We're talking about investing. I think there should be a broader conversation about the psychology of money. And let me introduce, I'm weird enough to have favorite behavioral biases. One of my favorites is something called loss aversion. It's basically the human condition or instinct that losses feel more painful than gains feel pleasurable. Psychologists set the ratio, or they've done research, and it's roughly 2 to 1, meaning that $100 loss feels twice as bad as $100 gain feels good. What we can hope for is that people gambling on Robinhood, not investing, because that's not what they're doing, people gambling on Robinhood, they've made some money, they might lose some money, they might lose a lot of money. Hopefully it's not an amount of money that impacts their life in any way, and this truly was just fun money. But it's an awesome teaching opportunity to say, how did it feel on the way up versus how did it feel on the way down? We are wired, just because from an evolutionary point of view, before you thrive, you have to survive. So we're always trying to mitigate danger before we're putting the cherry on the sundae. So a topic of conversation for people who are engaged in this sort of speculative activity is, how did you feel? Because we get that dopamine hit. We see that we click the browser, it's refreshing, or it's in the app and it keeps going up. That green flashes and we're thinking, man, I'm getting rich. How does that feel? Versus, well, the red is hitting and the price is going down and you've lost $10, $100, $300, whatever the number is.
Like educators, fireworks right now, that is such a big deal. If you can find the student brave enough to share that experience, that I'm taking what Brian just said. Now let's look at the last 10 years of history when fintech has risen in kind of giant popularity. The market hasn't lost. Since 2009, the market hasn't lost over a prolonged period. I'm sure immediately someone's March, April, a lot too narrow of a window for people to feel that pain that Brian just alluded to. And the pain is real. So fintech hasn't been tested with a kind of true recessionary environment from a stock market performance, which means your students haven't been tested yet. And it is a very, very different arena. We do have tools we can share that help your students manage through a Great Depression or a dot-com crisis or the financial crisis. Excellently worded, Brian. I'm frequently asked what I think the fastest growing areas of finance are, and behavioral is one of the three that I list. Rachel, sorry, we're going on tangents with all these great questions.
No, that's okay. I guess the final question that everybody wants to know is, how is this going to change, I guess, the dynamic of, I don't want to go back to the versus question, but is this going to change the dynamic of retail investors versus institutional investors? And maybe can we go ahead and explain those two terms too as well? And is there a point in which we can merge in this idea of a free market?
Brian, I'll take the pressure of that one, but then you lift me out of the hole I dig.
Yeah, because I think you go first because I have a strong view on this, and I want to make sure that I'm not upsetting anyone.
And then Janie and Sharon, bring us into the classroom.
Okay.
Retail investors, the individual, all of us, buying stocks or bonds or securities in an individual portfolio trading account. Institutional investors are large organizations, corporations, Carnegie Mellon's endowment, big retirement plans. So that breaks that defines the terms that Rachel just used. One of the largest sources of institutional money is becoming less prevalent. That's the company defined benefit plan. And it is being replaced slowly by things like the Roth IRA, an employee-driven retirement. Roth IRAs are currently 9% of all IRA assets. Rachel, we're going to blink 5-10 years from now. It's going to be a much larger amount because individuals don't have the choice of just closing their eyes and letting their companies do it. That's another reason I put that conversation on the educator, saying this conversation is imperative. It's not important. Your students aren't going to walk into a situation where their company is going to manage their retirement fund for them. They are highly likely going to need this life skill. So I think it's going to be a slow movement there. I think the instant access of information paired with education will ultimately equip the individual. I don't know if I set you up, Brian, or derailed your opinion, but I'll push it to you now.
No, I think my point is orthogonal. So the controversial thing that I want to say is that when we talk about institutional investors, we're actually looking in the mirror. Okay, so who are institutional investors? They are pension plans, they are endowments, they are foundations, they are, and many others. And so when you think about public and private pension plans, state of Pennsylvania, state of California, U.S. Steel, McDonald's, whatever. There are big public and private pension funds. At the end of the day, whose money is that? It's not U.S. Steel's or McDonald's. It's yours. Mm-hmm. You're the pensioner. So when we hear about institutional investors as the bad guy, number one, they're not the bad guy. Number two, all they're doing is investing according to a well-articulated mandate that, hey, they want to grow by X% and they don't want to take on too much volatility and, whatever the basic rules of the road are. So we want to be really careful about kind of the black hat, white hat, good guy, bad guy thing in markets. We look at institutional investors and we should recognize that the end beneficiary, whether it be the Carnegie Mellon Endowment or a foundation at Pitt, we are the beneficiaries of all that. And so rooting against institutions and for the little guy could be a totally earnest stand-up, person. It could be somebody who's trying to spread rumors on the internet, and a big institution, they could be doing good things. Maybe they're not totally fulfilling their mandate. Mm-hmm. But to a point that I opened with, this notion that hedge funds, which is a very, very vague concept, are bad guys or bad players in all of this. Roughly 65% of the $4 trillion that sits in hedge funds, including Melvin Capital, which is getting blown up by the GameStop Reddit horde, 65% of that capital is pensioners' money.
Yeah.
So that's not to say anyone's to blame, but it is to deliberately confuse things so that we can't make general claims about good versus bad in these battles.
Janie and Sharon, I can tie that in with a classroom assignment, and we'll have Jay Morrison, who's operating behind the scenes. We'll put all these classroom assignments into a nice package. Take the state retirement system of Pennsylvania. Both of you are educators. You can go to the state retirement system and back into exactly what Brian just said. Your students can look at the investment options and back them into how they're actually benefiting each of you and the educators. So, and again, it's not an either or. It's just the arena that we keep defining. The largest owners of GameStop are names that your students are gonna be familiar with. Some of these: BlackRock, Vanguard, State Street, Charles Schwab. Those aren't hedge fund names. Those are companies that are invested on behalf. So there is, again, I think we've done an excellent job here at the hour mark of trying to provide context versus saying yay, nay, right or wrong. Because my favorite thing, what I love about teaching at the university is listening to my students, learning from my students. Why do you feel that way? So that's this incredible bridge that educators have. Rachel, I loved your questions. Little guy, let's dive in. Let's unpack that. I think that last point, Brian, fantastic, incredible circle that can be drawn into how it works.
And can I add in one very detailed point, which is that I believe most state plans, public plans, have to provide, granted with a lag, a full roster of their portfolio.
Yes.
You can actually
all public. Yep. All of it.
So whether it's Illinois, where I'm at, Pennsylvania, where you guys are, and where I grew up, they list all of the hedge funds that they are invested with. It's an interesting exercise to just see who they are.
as well as the index funds, and that some of them will be large enough you will even see the individual securities. Janie, Sharon, push back on us there. How was that? Did we go too far, or was that an interesting circle as we wrap this up?
Sharon, you want to go?
And don't be shy,
No,
push it back. We're here to help.
No, that's good. I think there are a lot of topics as I've been listening to you that I think, okay, these are terms I'm going to introduce to my students and kind of, water it down so it's easy for them to understand. You've given us a lot of good background with that. So, yeah, thanks. Mm-hmm.
Yeah, and I would agree the same thing. There's a lot of information. I like the roundtable discussion that brought out a lot of things. And I think it's a great way for educators to, we could ask the questions. We could have our own roundtable with this information as well. And with the lessons that are any information that you could provide, to help us navigate those kind of questions, that's going to be helpful as well.
Yeah, I think, Jean, when you made the comment, and it was just so poignant and really hit that, like, hey, you may be responsible for your own investing, not somebody doing it for you down the road. And that's why you need to know this. Somebody that's starting in their career doesn't want to hear that for the first time. So if they at least have, some sort of rudimentary knowledge about this, it'll be less fearful, less threatening for them too.
Well, let's, if educators want to do this again, I'll throw this out both to our live audience now, as well as anyone listening. I'll speak for Brian, but I think we have a unique background in terms of not managing money, but having come from that institutional world where we can help with questions and help, at least in my mind, provide context that in theory will help your students be better prepared, but also helping them learn on their own.
Yeah, put me in, Coach. I love this stuff, and a little bit of knowledge goes a long way in helping people make better decisions. This stuff's so intimidating. We'll do another session someday on how our brains are wired to make terrible decisions. Suffice it to say, we have the cards stacked against us. So the work that you guys do as educators in defining terms, connecting the dots, it is amazing. It's really important and impactful.
It's heroic. The work that I see educators doing every day is heroic.
Oh, yeah. Love it.
Rachel, did we get the question there? Do you feel better? What's your emotion?
I feel a lot better. I think, it's all just a waiting game right now, but I think we put quite enough on Sharon and Janie's plate in terms of the next few weeks of educating as we see all this unveiling. We do have one final question that I think is a great way to wrap things up in terms of lessons learned. Will the majority of small investors in GameStop make big money on the short squeeze, or just the early ones?
Right, Rachel, I think this will be the lesson we learn over the upcoming weeks. Depends if they sold. The data will come out. The data will come out on what % of these trades were Robinhood versus Schwab versus E-Trade. The data will come out on were any of these message board, rah fake names. A lot to learn. That's a conversation for another time. That's when we could go down a big rabbit hole. Let me say thank you to our entire panel, Brian, Sharon, Janie, Rachel. Thank you to all the teachers watching live and watching this recorder. We are here to help. We are here to be a resource. Don't hesitate to reach out. Thank you, everyone.
Thank
Thank
you.
you.
Thank you.